Goodest morning, goodest morning to all those paying attention. My name is Silas. This is Silis Trades. Um, in this video, I'm just gonna be giving a as brief as possible explanation of the solid strategy, the way I trade, how I trade, and how we've made about I want to say 1,500 in the last 2 days. And then today is Tuesday. Today is Tuesday, May 20th. Yesterday we did about 800. Today, so far, we've done about 6. Uh, I'll be looking for more setups later in an Asian session, which you will understand here shortly. Let me share my screen. Let me send this out to the Discord. Also, if you're not already a part of the Discord, feel free to join. The description is the link is in the description. So feel free to join the Discord. We're in there daily, adding value, adding education. I'm in there with the trades every single day. So if you're not already, please go ahead and join that. Share it with a friend. Sorry, give me 1 second. Gonna be having some technical difficulties real quick, fast. But I'm gonna go over my strategy, solid strategy 1 and solid strategy 2. These are the only strategies I use to trade, to make money in the market. I'm going to try to be as simplistic as possible and give the most value and education at the same time. So this is what you're looking at here. This platform is tradingview.com. It's one of the leading chart formats out there. There's others, NinjaTrader. I try to go over these things every video. I'm gonna try to continue to do that for the people who don't know anything about trading and even those who are vetted in it. But this is TradingView. Gives a display of price action, how prices moved amongst a certain instrument or pair. This is the futures market. Remember, the skill set is trading. You can be trading crypto, futures, Forex, doesn't matter. The skill set is trading. If you can trade, you can make money in all these markets. So we're going to go over the first strategy here on NAS. We have 2. You might hear my kids in the background enjoying their life. But here we have solid strategy number 1. We're going to go over on NAS, and solid strategy 2, which we'll go over on gold. We're going to go over on, we can go over solid strategy 1 on gold as well. But we're going to start off with NASDAQ here, which you can search for different instruments, stocks, funds, futures, Forex, crypto, indices, bonds, and whatnot here on TradingView. You can trade pretty much anything that you want to, all the markets, and then you got your different brokers that you can log in with. Like if I were to log out of Tradeovate, which is my broker, we've got different brokers you can log into, which are the brokers are the middleman for you. Put your money through the broker, then you can get onto a platform such as TradingView or go through a prop firm and trade through them through one of these various brokers. But like I said, the broker I use is TradingView. If you don't have a broker, if you want to practice trading, you can always go to Paper Trader right here on TradingView, click it, connect, and you'll automatically be given a virtual account of $100,000, which you can use to paper trade, which we'll use that right now to make some moves here so I don't mess with my accounts. So, but what we're going to do is go over the first strategy, solid strategy, which I use most mornings in New York session. There are 3 sessions throughout the day. You have New York, Asian, and London. New York is usually from 8:30 to about 3 p.m. And right now we're looking at a daily chart. Right here, you see daily 4 hour, 2 hour, 1 hour. I'm really a 15-minute time frame trader for the most part. I'm a scalper, which means I scalp trade. Am I not sharing my screen? Let me make sure I'm doing that. We don't want that. We don't want that. So like I said, this is Trading View. We're looking at NASDAQ here. You can search for different instruments. We got gold, Bitcoin. You can trade pretty much anything on Trading View, stocks, funds, futures, but all depends on the broker you're going through and how you're set up. But you can trade pretty much anything with the skill set trading. But like I said, I'm a scalper for the most part, so I trade on the 15-minute time frame. I might go down to the 5 and 1, but 15, 30, 1 hour where I usually find my comfort zone. So we're going to go over this first strategy. But like I said, we're looking at a daily time frame right now. So each one of these candles that you're looking at would accumulate an entire 24-hour span. So if we're starting off with the strategy here, let me up this a little bit. We're going to go in order of these steps, and I'm going to show you why these things make sense and why I do them. But the first strategy is a support and resistance setup. All these are setups for probable entries to get the most, probable entries to get the capitalization on these profits as much as possible. So when we start off for the day, when you first learn this trade, I don't necessarily go all the way to the daily anymore, but that's how I started. So that's what we're going to begin. So we go to the daily time frame. We start with our top-down analysis, which will just give us a feel for where price has been and where price could possibly be going. So if each one of these is a day, today's Tuesday, this is today, it was Monday, this will be Friday, because the market is not open on the weekend. The market closes at 5 p.m. on Friday, opens back up at Sunday at the same time, well, 5 p.m. my time central. So we know we're about here playing in price daily. So we'll mark the highs. I'll put that in black. We'll mark the lows because this is a daily time frame. So we don't want to go too crazy. So we know that we're currently playing somewhere within this range, right? So we can go down to 4. We can do it again if we want to. We can say the 4 is using this daily high. You can name it whatever you want to do. If you want to, we can put daily high, daily low, and then if we are marking off 4-hour low, we can go here if we want to, and we can name all these things to help better read the chart if that's what we feel we want to do. So then we go down to the 1 hour. We see that utilizing the top-down analysis, we're able to zoom in on price and see where we're currently playing at, instead of being too muddled by the entirety of the chart, because it doesn't necessarily matter. So we know that we can, utilize the 4-hour low as the same as the one. We don't have to necessarily, once you see the things with your eyes, it gets a little more clear. So then we get down to the 30. This is all just showing us where we're currently playing at. So now that we're this low or this close, we can get into the next step, which is the trend. So if we can zoom in a bit, use this trend here. I'm going to mark what direction is price currently heading in. If we use this, we can see that currently we're in a bit of a downward trend. Overall, it may seem like we're in an upward trend, but we're worried about what's currently going on. We're not trying to make money later. That's what swing traders do. A swing trader might hold a trade for days, weeks, months. Day traders hold them for relatively a short amount of time, minutes to hours. So we're not currently concerned with 4 hours from now. We won't be trading 4 hours from now. But the trend that we're currently in is respecting this upward range. So we would say we're in a downward trend, just as a basic bias. Could easily shoot up and pass this trend. But just starting off making our markups, that's where we're at. Next, we will make the support and resistance markups, which Sometimes this is difficult for people to understand. Support and resistance are just where we've bounced off from the top and the bottom. So support would be the bottom. Support, you can also call it demand. There's different names for these things. But as you can see here, if we use this 4 hour low, price, these wicks are where price, sorry, these wicks are where price has gone to but not stayed. If it's black, this is my personal setup on my chart. You can change the colors of your chart however you see fit. But for me, black means down, but white means up, or down, which means bearish, up, which means bullish. So as you can see right now, price is still respecting that trend. You could have sold from here, but that's neither here nor there. We're talking about the strategy right now. So support and resistance. Support would be the floor, resistance would be the roof. So we're trying to see where price is bouncing off of. So we see these wicks here. So price has been bouncing off this range. Then the same thing here. We just want to give a basic range of where price has been bouncing off of. It's about there. Now the roof been bouncing off here a lot. So we'll make that the roof. You can do it that way. You can make the ranges like that. Personally, at this point, I will more so box off my range with one box and then mentally seeing that, okay, this is support and we've got some resistance up here. That's kind of how I usually mark it off myself, just from my visual. But you can also do it that way, just marking off the range. Got some areas here that price has been bouncing off of. You can make it a nice little color, make it orange. And we got resistance up here. So now we know where price is playing. We know the direction of price. Next would be news. Well, where all of this is technical, it's all these markups, all these numbers, this is all technical analysis. We want to also know if there's any news events that could affect price. So today is Tuesday. We can refresh this. Today is Tuesday, May 20th. It's currently almost 10 o'clock. So we want to be on the charts around 8:30 when the market is about to open, and taking all these events into account beforehand, so we know that they're coming up. We know what time they're coming up. We know how they're going to affect things. This is Forex Factory, one of many news outlets you can use to know what events are being revealed. Like tomorrow, we have news at 1, 3, and 9 p.m. Nothing major. I like no news days for the most part. But these are all red and orange folders, which are high impact. You can adjust this to have the yellow folders active and the gray folders, which of course gray would mean very low. Yellow would mean low impact, somewhat moderate. You got orange, which is medium impact, and red, which is high impact. So if I apply those filters, we do get the orange and red folders updated, but no major news for today, which is Tuesday. That affects our price within our session, which is New York early. So news events taken into account, no effect will be taken. So we know now that we don't have to worry about, it's almost 10 o'clock. Maybe there might be an impactful news event at 10 that could affect our price, where we're in a buy going up, but price could be affected by the news event and take it down momentarily, but still taking us out of our profit, things like that. But if we know news is coming at 10, we know, okay, let me be safe, cut some of my losses or cut some of my profit, take it out, or completely cut my trade and wait for news to affect price how it wants to, and then look for a setup. So always take the news into account. Now, sixth step, which is some of my secret sauce, we're going to go ahead and say that sixth step is indicators. I don't use a lot. You might see a lot of people with charts that are marked up and down. They've got, you got this here, you got a million different, everything's everywhere. So I don't do that. I believe keeping it simple is the best way to look at the chart in a clear format. So the indicators that I do subscribe to here on TradingView are the fair value gap indicator, which let me get into that real quick. Oh, I'm sorry, I skipped that step. Fair value gap. That's where we'll put the indicators. That's my fault. I skipped the FVG. Now, A fair value gap indicator. Oh, I'm sorry, not indicator, but a fair value gap itself is a 3 candle pattern. You just want to see like a, let's go right here. You got this big black engulfing candle to the downside. You got this small wick on the candle before it. You got this small wick on the candle after it. Now, that's just an indication of an area that has a high probability of being entered again. So if we mark from the top to the bottom of the wick before the candle to the top of the wick after the candle, and we just mark it across. We'll make it a different color real quick. Just make it white. So if we were here at 1:30 a.m., that's London session, as you know, time frame over there in London, that would be, early in the morning. So uh, if we mark that area up, we can see that price continued to enter it, playing within it. So that's just a high probability area that you want to mark up when within your trades. If we were here and we saw it start forming, we know that, oh, if it plays within it but doesn't surpass it, we're going to continue down. If it plays within it and surpasses it, there's a good chance we're going to continue to go up. You want to dance with the market. You want to do what the market is doing. All these markups and indicators are just to help you see what the market wants to do, not what you feel, not what you think, because none of that matters. You want to go with what the market is doing, and these setups help you find high probability entries to make the most money you can. So that's the fair value gap. But going into that, I also want to go into the indicators. Like I said, we get the fair value gaps. You might want to put news. I might want to put news more like second, but this is what we go through generally. But with the fair value gap, I also have this indicator, the fair value gap Lux algo indicator, which kind of marks up these fair value gaps for you. I have it set for the 15-minute time frame. I can change that. We're on the 30 right now, but I'll change the time frame to 30. You can make adjustments to all your time frames for, you know, your personal preference. This makes them a bit smaller. I can put auto. Let's see if it marks it up properly. Too large. Let me take that down a bit. All right. So with that, it kind of marks up the fair value gaps for you. I don't see why I didn't mark that one up. It kind of did, but it should have definitely marked that one up. But as you can see, we're below this bullish fair value gap. It was respecting that trend, and as you can see, that's a high probability entry. We knew that price wasn't most likely with all our setup. Now that we're this far into the setup, we have this fair value gap here that would have been formed, and this would have been here for quite some time. When this candle was all the way up here and we saw it respected this trend, that would have been a great time to make a sell, a possible sell. That's just an indication. Had we done that, let's say with this micro NAS, let's say we sold like five contracts and we were targeting the top of this support. If we did that here, right here at the bottom of this fair value gap and targeted the top of the support at 5 contracts, that's $600. More than $600, but it's a simplistic format to find those entries, make the money quickly, and get out. So going into the indicators, and now in with the indicator that's my secret sauce. Got the fair value gap indicator that helps you with that, so you don't necessarily have to mark up your fair value gaps. You can use that indicator to do it for you. Then let me take that off. We'll go down one by one. I like to use the pivot highs and lows as kind of a target regiment for this. Like, it just kind of tells you where price went to its highs. Here you got this one. So had we if we weren't going to use that as a target and we were selling from here, could use this as a target, and you can see it came to that level exactly. If we were buying, if we were above this, I would have used this as a target or this as a target. But with us coming down, if I was using the pivot highs and lows, I would have used that as a target. So that's the indicator I like to use on that sometimes. Then we have the POC indicator, which I'll go over that with towards the end. You have the RSI, relative strength index, which kind of gives you indication of where price has been ranging, and when you see it is oversold, it's usually going to sell. If you see that it's over, I mean, I'm sorry, if you see it's overbought, which is the top here in this 70, 80, 100% range, you see it here, it's usually going to sell. When it's oversold, which is the very bottom, you see the 24, it's usually going to buy. And when it's in between like 50, it's usually ranging, which is just in the middle, just kind of sideways, which is kind of how NAS is right now. We haven't had any major pulls to the top or to the bottom. We have had them on gold, which I'll try to go over a top down, a support and resistance setup with that, but I'm going to go over the second strategy over there. But gold was a perfect example today of the first strategy, which I'll do it quickly when we go over there. But the value area, next indicator is the RSI. We did that one. It kind of just helps with indication of if we're oversold, if we're overbought here and it's been ranging in the area, you're not going to want to necessarily get into a buy when there's a possibility that it's going to make some recoveries to the downside. Higher highs usually mean higher lows. Take that in. So make sure you write that down. So that's the RSI, relative strength index, and then sessions. Sessions just kind of gives you a time frame analysis of London, Asian, and New York. I have this purple bar here is just Asian session, which is at night. From, as you can see, the start is 5 p.m. and it ends at 2:30 a.m., 3 a.m. So I only use that, which we can highlight whatever session you want. London, New York, you can make them whatever color you want to. As you can see, we're currently in New York session, which goes from 8 to 3:30. But I have Asian session highlighted because sometimes the highs of Asian session, which we want to mark up, this purple line. What was the highest point in the purple? Here. And I usually make that line purple as well. And then where was the lowest point on Asian session? Right here. So those are just key levels that can play a factor. As you can see, if we were playing with just that, it did come down to this level and bounce back up. It never touched up here, but it's just key levels, some factors that can help with looking at the charts. So that's sessions. Now, my secret sauce that I absolutely love that will give you could almost use just this indicator and it would help you make money and find direction and find high probability setups. I'm gonna remove every drawing that I have on this chart, and we're gonna get to my favorite indicator and my favorite rule. Now, there's a rule called the value area rule, the 80% value area rule. So this indicator here is the value area day sweep. When turning this on at 8:30, when New York session opens, it gives you green marks, orange marks, and red marks. These are the value area high, the value area low, and this is the POC. The POC is a point of control or a point of interest, just a point where price seems to continue to want to return to or might range on, just a point of interest within this value area high. So the rule is the 80% value area high rule, or the 80% value area rule is that if price opens up within the value area that, sorry, the rule is that if price opens within the value area, that it will complete that value area 80% of the time. Now, I have the open here. This green line that's going down is when price open. I'm gonna go to the 15-minute chart. That was a few hours ago at 8:30. Now, usually my rule is this: if price open below this POC, it's headed for the value area low. If it opens above the POC, this green line, when it opens, if it's above it, it's usually going to complete and possibly surpass the value area high. Now, not just these lines. You don't want to just think of these lines as just, you want to think of them as a range. So I usually have the thickness a bit heavier so that I see it as a range and not just a line. So I just didn't save it as a default. That's why. Okay. And so just turning on that indicator alone, the value area high sweep from price opening below, we could have just simply sold NAS to the next point. And that's when I also use, even though we have a POC indicated right here, I also use this POC indicator, which shows points of concern or points of interest throughout the chart, where were areas that were very volatile. You see this POC here bounced off every time it came down. This POC here bounced off every time. So basically, when it opened, when price opened, and I see that the value area high or value area low is here and this price is below it, I can target this range down here just as the range for this value area low and sell NAS once price opens. I like to wait for a specific time. So I like to wait for 8:45 before I trade. So had we done that, go to the 8:45 candle, just this black candle here. Got 8:15, 8:30. Price opened up, dropped below 8:15. It continued to drop, but it came back up a bit. But had we traded at 8:15, at 8:45, I'm sorry, from the jump to that range, or then just continue to target it. 8:15. It's a nice $375. And then knowing that, I always know that if it hits this area, it's usually gonna price wants to come back to this POC. That's something I know every time. It's something I go off of. So if I see that price has dropped to where our target was, and we begin to go up, I'm going to target. I'm going to get out of my positions, and I'm going to target this POC. If we break above it, then my second take profit would be the high. Now, there was a perfect example of this today on gold. I erased all my drawings, which also erased my my words. I know here it is. What's the second one that we're going to go over? But let me go back to the 15 and show you the value area rule that took place. It likes to, when you have this indicator on, it likes to minimize the chart because of the time frame. So understand that will happen. But you got to zoom in a bit. But perfect example of this today on gold as well. You got the open right here at 8:30. Price was above the POC, completely targeted value area high. We had this POC, we could have targeted for the second TP, and it just continued to rise after that. So that's usually what happens when it goes above. But that in those two indicators alone, the value area high and the POC, you can target areas of interest. You can find direction immediately at open, and you have, as long as you dance with the market, which is just going off price action, not off what you think, going off what the market is doing, you can make the money. You find the direction, you can make your targets, and you can get out properly. Now, I only trade at specific times, which I advise people to also kind of apply to their own strategy. Just wait for specific time. Make your own time frames. I like to wait for 8:45, 9:15, 9:30, 10:15, which is about to come up, where we usually get a structure flip in prices, and Asian session, which is what we're going to go over now on gold. Let me find my words. Go. All right, so I did get in on this strategy last night. So where'd it go? So where so where the solid strategy one is a support and resistance strategy, which is just a breakout. If it breaks out of the top, which is resistance, we're going to try to follow it. We're going to see what price is doing. We're going to follow it. If it breaks out below, we're following it, which is place into the value area high rule. So that's solid strategy 1. Solid strategy 2, which I utilize only during Asian session, is a market structure flip setup, which you can utilize in any session if you find the setup. But I usually just only trade it for the most part. I trade it solely during Asian session. I don't trade the first strategy during Asian session. I might trade both strategies during New York, but I specifically only trade the second strategy during Asian session. So it doesn't have any of, oh, that's what. Let me log out of this paper trading. Get into my account real quick. So here we go. So yesterday I did utilize this strategy while I was actually out and about. Right here. So with the second strategy, we're just looking for a market structure flip during Asian session at the top of an hour. So this first rule is obvious, Asian session. So we're only trading. Okay, let me take off one of these. You don't need the value area high indicator for this. We only utilize that in doing New York. So with Asian session, which starts at 5 p.m., we want to make sure that we're in session, which with just a time frame, but I'm putting this up for visual. So Asian session will only be between 5 p.m. and 2 a.m. So in the middle of that, we have about 9:30. I usually like to wait or look for this setup at the top of an hour of 6 p.m., 7 p.m., or 8 to find the setup. So we know we're in Asian session. We want the top of an hour had to have a major reversal. So we see that this trend is heading downward, right? This candle was originally black, but came all the way back up. I would classify that as a major reversal. We go down to the 5, we probably can see it better. Right here. Top of the hour went down 7 o'clock. It started to go down here. And then we have this major up trend right here, which is 740, which is fine. But it happened. So seeing that, I will wait for the next top, which was 8, which is right here, where I got in at. So we want a re-entry of the range. So when it jumped up, that was my indication that price could possibly flip structure. So I bet on the 15. Now these time frames they're just dissecting what's going on really. This is every candle here is 15 minutes. So it looks a little better to me. Every candle here is 30 minutes, so that might look a little better to somebody. Every candle here is an hour. So find what's most comfortable for you to look at price. So when we had that jump and trend break, and re-entry of the range, which we saw that better on the 15, which just means re-entry. Would just mean it went up and came back down into a range to give you a better discount on a buy. So once it did that and broke trend of another confluence, I wanted to break trend just because of what was going on. And the fact that you don't want to get caught up in a pullback. This could easily, I want to see if it respected the trend. So at 8 o'clock, I did get in for the buy. Could have waited for 8:15, which is this rule here. You want to wait 15 to 30 minutes into the hourly candle for entry. I did not wait. I could have, but I didn't. I got in at 8:05, I believe so, or 8 o'clock. So with that market structure being flipped, we want to target the POC. I think I targeted here, but it kept going. You can use previous POCs like here or anything like that. But I think I was riding and it came down, so I got out. But that was it. Targeted the highest POC, but that's the strategy. That's it. A market structure flip. You want to see a big engulfing candle that looks a little bit off. It's like, oh, price has been going down this entire time, and it's only at these specific times. I'm not looking for this at any other time besides the same time every day. It makes it a repeatable system that you can actually measure. You're not just randomly trading at any point in time. I'm waiting for Asian session, top of a candle between 6, 7, and 8 o'clock p.m. If it's after that, I'm not trading. If I'm trading New York, I usually stop around 11 if I haven't stopped way before that. Uh, we did, how much did we do today? Did about 600 today off of the value area high rule. So it's not that we've went over the strategy. I can show you I how I used it today. We took a few trades. So I believe I did show you how I used it today, but we're gonna go over it again. But price was below the POC at open. That gave me indication for sell. I also had markups, breaks, trend. So these are all indications of sales, and the price is still playing below this POC here, still within the value area high. We're really just playing sideways. We haven't done too much of anything on price as far as NASDAQ goes. Gold was the real winner as far as solid strategy one. Opened above the POC here at 8:30. You see the candle right there. Let me go to the see this line right here. Why is it so light? But this candle, this line here, we have price playing above the POC. Once it broke, we could have waited for this wick here as it came back down. This POC was indicated already. We could have waited here to get in for the buy. We could have waited for it to get to here to get in for the buy. Either way, we knew buys were the buys for the day on that with just the value area high and the POC indications. Nothing else. Keeping it completely simple. And I've been doing that this last few days, just keeping it simple with these two indicators. I can eyeball trend and support and resistance. I can mark those up within my mind quickly. Like, oh, okay, price is here. It's been playing here. It's been playing here. We can mark that up quickly. You can mark it up in the box. You can mark it up with range. Support here. You got resistance here. You know that. So if it breaks and it doesn't pull back within a fair value gap or anything like that, you know that continuations are most likely. But with these indicators, you can have your fair value gaps marked up. You don't have to worry about marking them up manually. So utilize indicators, but don't use too many. Keep things simple. Keep your charts clean, and you'll be able to see what price is going. You don't want to just jump into random trades and lose money. So like here we see, obviously, we have all these bullish fair value gaps. If it was bearish, it would be a red box instead of a blue one. So we knew that's more indication of buys. I did not buy gold today. I was looking at NAS for the most part, but we made 600. But playing around, let's say we went crazy and we put in a large contract. Let's say we went aggressive and we put in a 15. You got stops, limits, and market executions. A stop would be like a stop sign. You stop and you continue to go that way. So had we been in for a stop, if we put it here and price was below, once it got above this range and we targeted, say, here with 15 contracts, that would have been over $3,000. Me, if I was truly doing it, I would have bought in here, right here. Probably targeted this area, something like that. Would have been nice range. And you want to put your stop losses. So if price comes down here, you only lose a certain amount. If price goes up to your target, you win a certain amount. Price can keep going, which is great. At least you were correct, which is great. So once again, the stop limit, the stop would be setting price. If it's a buy, that means price is headed towards it, and you want to get in to that buy once it reaches that point, and you can set up your take profit and your stop loss. So that's like setting things up. So if price gets there, then you're in. Same thing with a sell buy. A sell stop. If price was dropping and it hits your line, then it gets you in for the sell, and you have your take profit set up. You have your stop loss set up. A market execution simply gets you in right away from this specific point of price that you indicate, but you can still set up your take profit and your stop loss for the amount that you want to win, the amount that you want to lose, the contract size, and all that good stuff. So, like I said, we did utilize the strategy today. We should have used it on gold because boy, oh boy, but NAS did pay off, having a bit of a rise. And like I said, this POC usually wants to get touched again throughout the day. Like it wants to, if it's playing within the value area, it wants to continue to touch this. We're ranging. So if price was to drop here again, I would buy to this POC or close to it. But I'm pretty much done for the day. But yeah, that's the strategy. Solid strategy 1, support and resistance setup. Solid strategy 2, market structure shift during Asian session. Same price, same time every day, same setup. If I get it, I take it. If I don't, I don't. Right now we're on a win streak, and I'm only utilizing those things that I've just shown you to accumulate that win streak. Simple stuff. I could use just those 2 or 3 indicators that I showed you and make things work because I can visually see support and resistance. We can see where price is going, and we go based off what the market is doing, not what we think. We go off price action. We dance with the market. That's trademark saying. Don't take my shit, but I'm just playing. But that's it, man. Tomorrow we're gonna go for a bigger bag. We did great today, but tomorrow we're gonna go for a little bigger numbers. And also tonight I'll be doing agent sessions, so I might go live again, show you that solid strategy 2, and make some more money here. But like I said, if you're not already, feel free to join the Discord. We're in there every day. Like I said, I'm utilizing everything that I know to give you guys value. Like I said, we were selling NAS. I put that in the fucking Discord. People making money. This is one of my students, one of my top students. He's doing great. You know what I'm saying? Well, like I said, we're in here every single day, adding the value, teaching what needs to be taught, and sharpening this skill set. So, like I said, right now I'm done with New York. $600 for the day. It's only 10:30. I've done plenty. I'm about to go get a workout in, take my kids to the park, have some fun with my wife, and enjoy my day, man. I'll probably come back tonight, go live for Asian sessions, show you guys the SS2. But besides that, I hope you guys join the Discord if you're not already. Sharpen your skill set, and we'll be back at it tomorrow morning. My name is Silis. This is Silis Trades. I hope you guys have a great day, and I'll see you next time.